Hey everyone, it's Tom Kradza with another Rockstar Minute. Have you seen the headlines on the Financial Post today? And we want to talk about this, and it's about interest rates, and we get super excited about this stuff. It's almost like we live for these interest rates announcements right now. That's how much pleasure we get out of watching all this stuff. In the last few months, everyone in Canada, but maybe not everybody, but almost everyone, has been saying expect a rate increase in 2015, almost like it was a foregone conclusion. And in today's headlines, so early on in January, we're not even 3 weeks into the new year yet. We see low oils, 3 R's, recession possibly in Alberta, red ink, Ottawa slipping into a deficit, warns TD Bank, and the last one, rate cut. Market sentiment swings toward monetary easing. So now we're hearing that not only will there maybe not be a rate increase, it won't only just be the status quo, maybe there's going to be a rate decrease. So this to us is fascinating stuff, and we kind of watch this stuff a lot. It's a big part of the economic update we give at the upcoming Your Life, Your Terms event. And we don't think there's going to be a rate increase this year. If there is, it'll be a marginal one, almost like a symbolic one. But I don't even think we're going to get that. I think it'll be flat. It'll be interesting to see if rates decrease. And here's the point about all of this. We don't know for sure. We study this stuff, we watch it, but we don't know. The only thing we can do as real estate investors is control our real estate investments. So we have to look in the Greater Toronto area for cash flowing properties, because during good economic times or bad economic times, during times where interest rates increase or they decrease, it's easy to carry a property that carries itself. So for us, the most important thing to do is look for cash flowing properties, and they do exist. If you're in Toronto proper, they're hard to get. But on the outskirts of Toronto, there's some great communities where you can find this stuff. That stuff to us is the most important thing. I have many friends who've been trying to buy real estate for many years now, and they're always looking and waiting for the big thing to happen when the market kind of plunges, and then they've convinced themselves that they're going to buy then. Here's why we don't think that's a good idea. You make money in real estate from holding on to it for long periods of time. So trying to continually time the market is really difficult. The second thing is, when the market does go down, and one day it will, do you think banks are going to be friendly to lending in that type of economic environment? So how are you going to buy? Will it be easy for you to buy? And the third thing is, are you psychologically going to be prepared and ready to buy? In 2008, the last little kind of waffle we had in the economy back then, a lot of people who told us they were going to buy stood on the sidelines and didn't buy. The few people we know who did buy then have done really well. So really to us, waiting for the perfect time to buy real estate, waiting for interest rates to spike up so the market crashes and then you kind of enter the game, that's a tough way to make money in real estate. Real estate's tough enough already. Buy cash flowing properties and hold on to it, and study this stuff so you can manage your portfolio through the ups and downs of interest rates. We hope you find that useful. Until next time, your life, your terms.